Hello and welcome to the Killik & Co market update. This morning, shareholders in Thames Water said they would not be providing £500 million worth of fresh equity by the end of this month, as previously agreed. Thames Water has billions of pounds worth of debt, it has a very high interest bill, and furthermore it needs money to invest in its ageing infrastructure. The Thames Water shareholders had been in discussions with the regulator, Ofwat. The shareholders want a number of concessions. For example, they want concessions on regulatory fines, they want to be able to put customers' bills up by 40%, and they want permission to pay themselves dividends. Ofwat has clearly not agreed to all of their requests, and that has led to a stalemate. Thames Water is not on the stock exchange, but Ofwat's stance will be relevant to the listed water companies. On the London Stock Exchange, we have Pennon, we have United Utilities, and we have Severn Trent. Here are the share prices over the last 10 years. The shares have been in demand for much of the decade because of their high dividends, although there was a bit of a wobble in 2017 when Jeremy Corbyn campaigned to nationalise them. More recently, the shares have sold off, and this is partly because interest rates have risen and some of the investors who wanted those high dividends may have switched to government bonds or interest-bearing cash accounts instead. However, there is also a concern about these companies being investigated for poor conduct, particularly in relation to illegal sewage discharges. Pennon has been the worst impacted, with its shares down over 50% from their peak. We've had a couple of new listings in the US this week. Reddit shares gained 50% in their first day of trading, and Donald Trump's social media company, Trump Media and Technology Group, gained 35%. Investors tend to shy away from new issues when they're not feeling confident, so it's nice to see the level of demand here, although it's likely that demand for Trump's company largely came from his voters rather than regular investors. We showed this chart recently, which illustrated the huge decline in IPOs since 2021, but more recently there have been some signs that it might be starting to pick up again. And finally this week, a FTSE 250 company called Spirent Communications has received a bid from a US company called Keysight, and the bid has been approved and recommended by Spirent's board. Spirent shares have had a difficult couple of years, due partly to some company-specific issues, including a significant profit warning, but also due to the fact that UK mid-caps are very much out of favour. Here's the UK mid-cap index, the FTSE 250. You can see it's still way below its 2021 level. And this means that many overseas bidders are taking advantage of these cheap valuations in the UK. There have been numerous bids for UK companies in recent months, as well as many companies voluntarily moving their listings to the US, and therefore there are some genuine concerns about what could become of the UK stock market. Moving on to have a look at next week, as you can see it's very quiet on the calendar with very few companies reporting, so that leaves me to wish you a very happy Easter weekend, and I look forward to seeing you next Friday.